That's my quant.
Your what?
My quantitative. My math specialist. Look at him. You notice anything different about him?
Do you ever feel like you don't have enough time, money, or a consistent strategy to trade the stock market? When I was starting out trading, I was excited to trade, but I'd either get analysis paralysis that ultimately led to inaction, or I'd seed massive market moves on stocks that I had on my watch list, but completely missed because I was too busy during market hours. And it got to the point where this lack of time was leaving me to question if I should just quit trading options on individual stocks altogether. I thought, why not just trade options on the index itself? If you're lacking time or feeling like you want to pack it all in, try this simple system. So I got curious, can I take a realistic account size, like what most retail traders are working with, and show them that even with this, I can still accomplish a quantitative long-short options strategy? Here's my recent results. Total starting capital was $1,850, and the setup time was, you guessed it, 5 minutes. Index options let you trade the entire market's movement rather than trying to predict individual stocks, using small amounts of capital to control much larger positions. Like paying $2K for a house contract worth $200K. I know what you're thinking. Houses don't cost $200K anymore, Brandon. You're right, but I'm using simple numbers so you can focus on the concept. House jumps to $250K, let's say. Your contract is now worth $50,000. You sell and pocket $48K profit. That's exactly how options work. Right now, you can spend just over $1,800 to control $65,000 worth of SPY stock for the next 129 days, and profit from price movements without actually owning the shares. You're trading on the broader economy rather than the fate of a single company that could be derailed by scandals or other company-specific issues. Picture a concert. The band announces this is the last song. If only 20% head for the exits versus 80% of the audience, that tells you something different. Market breadth works the same way. S&P hits new highs, but only a handful of stocks make yearly breakthroughs. That's my warning signal. I used a hedge position, a diagonal call spread plus a vertical put spread. I knew my maximum loss upfront and had capped the downside risk while maintaining unlimited upside potential. The put spread cost me only $500 per contract, while the call spread was around $800. But when the market moved against my puts, the call spread more than covered the losses, so even when I was wrong about direction on the short portion of the portfolio, the math still worked in my favor. The magic happens because of theta decay symmetry. My short options lose time value faster than my long options. And if it moves in either direction, my long options gain more than my short options would lose. Most traders think you need to be right about direction when it comes to trading. But this framework profits from being right about volatility in either direction. The trade-off is you cap maximum gains for systematic risk management on the verticals, but diagonals give you more flexibility for active management as conditions change. The framework operates on breadth analysis, but not directional counting like advanced decline ratios. Most traders measure how many stocks went up versus down. That's still just direction with more data points. I measure significance of the move, not direction. For this kind of portfolio, you need a brokerage account with options level 3 approval. A desktop platform is recommended for trading in general, but this strategy is so simple, you could even use a phone for execution. I'm holding a live workshop that will show you the complete 5-minute index options portfolio. The exact system that turned $1,850 into $5,150 in 39 days. Just a clear, step-by-step system that works whether you're starting with 2,000 or you've been trying to crack this code for years. Join us. This is results-based approach versus theoretical backtesting biases that just doesn't work in real markets. Understanding this 5-minute setup is just the beginning. If you really want to think like a quantitative trader, you need to see what we actually do all day. Most people think quant trading means complex algorithms and PhD math. That's wrong. Next video, I'll show you exactly the tools we use, how we think about risk, how we completely remove emotion from every trading decision.